Passively investing in apartments can be an excellent way to unlock your wealth potential, creating additional streams of income for you while reducing your tax burden. Anthem Capital is a premier real estate firm that helps busy, high-income professionals who struggle with making time for what they love through passive real estate investment opportunities and education that will unlock their wealth potential and create a lasting and positive impact in their community. Anthem helps investors build generational wealth through private multifamily real estate investment opportunities in stable, yield-producing properties across growing geographic markets in the U.S. Their extensive knowledge and experience is why passive investors are able to see strong performance while minimizing their downside risk. Take action today. Visit unlockwealthpotential.com to request a free copy of Anthem's book, Unlock Your Wealth Potential Through Real Estate Investing.
All right. Well, welcome everybody, and thanks for sitting through our minute-long commercial. I'm your host, Dan Cosgrove here. Happy to be with you again on another office hours, which we have coined this month to be our mystery market event, in which we will do a deep dive into a specific market that we really believe you want to invest in. If this is joining, then I just want to give you a quick intro on myself and the company that I'm representing here. So I'm Dan Cosgrove. I'm one of the part of Anthem Capital. I'm joined by a few friends of mine, Tariq Satar, Ivan Vian, and Tyler Cobble, where we will jump into details about this particular market and what we're looking for from real estate investors. Who's Anthem Capital and what's our mission? Our real goal is to help people escape the 9-to-5 and unlock their wealth potential. What we mean by that is there's a lot of money-rich but time-poor individuals, and we want to help them figure out ways to create a passive stream of income that will allow for them to really achieve whatever they want in life and spend more time with friends and family, give back to the charities that they care most about. So that's a bit about us. Now we'd like to jump in and give you a bit more details about the day ahead of us. So let me get over to my presentation real fast. The agenda today in this mystery market event is, first, we want to give you an overview of what is the typical acquisition criteria that we're looking for. And then within that acquisition criteria, what are the 6 things to look for in any market that you want to invest in as a real estate investor? From there, we're going to get into kind of revealing what is this mystery market that we're talking about. And at that point in time, we'll turn it over to Tyler, who's our local boots on the ground there, to provide more details. And then finally, we're going to reveal what this market is in. And we'll close with a surprise gift that you will definitely want to stick around for. So with that, I'm going to turn it over to my partner, Ivan, to talk about our initial acquisition criteria.
Hey, everyone. Thanks, Dan. Yep. When it comes to our acquisition criteria, one of the things we want to really focus on first is where we're going to purchase these assets. Primarily, we like to buy them in landlord-friendly environments. That's typically in the Southwest, Midwest, and Southeast areas. You'll see low volatility there overall, but more importantly, you'll see positive demographic trends when it comes to job growth, population growth, and rent growth. You'll find that primarily in some of these Southwest, Midwest, Southeast markets. And we look for overall strong and stable multifamily fundamentals. When it comes to the property level, what we kind of asset we like to typically focus on is in the average deal size around the 15 to 50 mil range, anywhere from 100 units up to around 300, 350 units. And we find that that's where we have limited institutional competition, where we can find the best deals because fewer eyes are looking at these deals. We do want to buy assets with a core plus value add component to it, or they may be failing on the operational side, or the property needs to be improved, and you have a lot of in-place loss to lease and opportunity to create rent growth. And we'll apply our operational plan in order to reposition the property and improve it overall. And in these type of value add assets, we like to see them typically where we can acquire them below the replacement cost. For the portfolio level, we do like to buy as many assets as we can in particular geography in the region in order to create our own internal efficiencies when it comes to the asset management side and the operational side. And so we have multiple assets, for example, in Dallas, Kansas City, Salt Lake City, but we do focus on other markets like Atlanta as well. And then when we buy in these portfolio type acquisition deals, it allows for a portfolio type exit where an institutional player would come in and want to acquire the entire portfolio overall. Over to you, Dan.
Yeah. So thanks, Ivan. I think the best person to turn this over to now is actually our friend Tariq, in which we're going to jump into the 6 things to look for in any particular market. This is a broad overview of the 6 things we're going to look for. The market specific, there could be some other things. So Tariq.
Thanks, Dan. As Ivan just mentioned, he touched on a couple of these things already. But one of the key criteria that we look at is the size of the metro that we are acquiring the property in. And as a baseline, we want to be where there are at least 100,000 residents. Gives us a good, very good scale to start with. We have acquired assets, relatively smaller assets, 100 units or so in smaller markets as well. But there must be a very strong, compelling story if we were to go that route. But typically, we don't like to focus on markets that are smaller than 100,000 residents, ideally much, much larger than that. Next one, Dan. And then coupled with that, as we have the larger metro areas, we want to make sure that there is both a strong population and job growth trends in that market on an ongoing basis. So we typically look for markets with a net positive migration data for a number of quarters, for a number of years, and look for markets and opportunities where there are employers coming into that market. As both the employer and employment growth happens, that pulls in population growth. The two just are tied together. So those are net positive migration on an ongoing basis. And then coupled with that, strong incoming growth from employers. There are markets. One of the markets that we focus on, Dallas-Fort Worth is a market that we have acquired several properties in. We have sold several properties in that market. And that is a market where there has been continuous growth for a number of years, both population and a lot of employers moving their headquarters, moving their offices into that area. So those are, that is a second key criteria that we look at as we identify a market that we want to focus on. And then, of course, when you are looking at employment growth, population growth, it usually goes hand in hand with the local governments, local bodies that have a very strong focus on growth to bring in those employers, to bring in that population, whether be it through tax incentives or other kinds of incentives. But these are, governments, agencies that are very focused on bringing in employers and making sure that there is continued growth. So, and these are, government agencies that then are very willing to work with us as multifamily owners to make sure that we are able to provide housing, workforce housing to those employees and to that incoming population that results with their focus on growing the employment and the employers in that area. Another key factor that we look at that there must be multiple employment drivers for that particular market that we are in. We have had experience with buying properties in areas which are in markets which are very dependent on, very reliant on one particular employer. Could very well be, an army base that might be in that particular area. There are markets like Wichita Falls or in Texas, where Lawton in Oklahoma, where we have had experience of owning properties, but they are very closely tied to what is going on, the deployments and the underlying dynamics of that one particular large employment driver. So, we want to make sure that there are multiple of these drivers, employment drivers in a market that we go in. So we are not relying on one, and there is not a significant detrimental impact if there were something to happen with a particular employer or driver in that particular market. So barriers to entry of similarly priced competition. There, the key thing is that a couple of things we look at there, of course, is ongoing construction. As there is metros that we focus on are metros that are growing significantly. There would be growth by way of new development, but that is Class A product, which is at a different price point. The price point, both from a replacement cost standpoint or development standpoint, as well as the rent level standpoint, is very different. And then we also look at the affordability gap that is there between the rent pricing, the monthly rent rate for the product that we offer versus the mortgage payment on a monthly basis for a single family home. So those are, other key criteria that we look at to make sure that we don't lose tenants to our competition on an ongoing basis. And then, of course, we are very focused on markets where the legislation is landlord friendly, business friendly, as opposed to tenant friendly. We don't look at, we have never owned assets in the Northeast or West in California, in New York, in those areas where the legislation typically is very tenant friendly, and it could take you upwards of 6 months if you were to evict a tenant. We typically like to focus on markets where the legislation is landlord friendly, and if we were to go down the path of evicting a tenant, it would be a matter of weeks and not a matter of months. So those are the key criteria that we really focus on as we are looking at identifying a particular market that we want to acquire an asset in.
Perfect. And thank you for that, Tariq. I also loved how you spent a lot of time talking about Texas. And I'm sure some of the viewers here are thinking it's like, oh, they're definitely, already hinting that this is going to be a city in Texas. Maybe it is, maybe it isn't. So at that, I'd like to transition this over to our partner and local boots on the ground in this mystery market. Maybe it's in Texas. I don't know. Tyler Cobble. So Tyler, take it away, my friend.
Yeah, I do have family in Texas, so leaning further into that mystery building. Yes, my name is Tyler Cobble. I'm a commercial real estate developer in this mystery market, and we're going to dive further into the characteristics of this market based on what Tariq has just said. So first up, MSAs with a minimum of 100,000 residents. This city has roughly 2 million residents and in the MSA. And I'm actually from here, grew up here. The wild thing is I have seen this city double in far less than my lifetime. So pretty outstanding growth fundamentals there in terms of residents. Number two, strong population and job growth trends. Roughly 100 people are moving here a day. Depending on who you talk to, sometimes that's 87, sometimes it's 120. I think it just depends on the season as to why people are moving here. The crazy thing is that a significant amount of that is due to job growth, which we'll talk about here in a minute. But also this city has a very unparalleled character to it that is drawing millennials and established companies as well for a wide variety of reasons, which is pretty exciting to see. Continuing on the strong population and job growth trends, projected 20% population growth through 2023. Some people feel that may be underestimating what is going on in this market. We've seen quite a bit of growth here since the pandemic hit. You've got kind of, as Tariq was alluding to, you've got a flock out of the Northeast and out of the West to the Sun Belt, right, which is where this market is located. And it is certainly a beneficiary of that growth. A 271% increase in six-figure jobs from 2015 to 2020. There have been some major jobs announcements here, as well as headquarter relocations from some markets that you would be relatively surprised to hear, considering the fact that they have decided to move to this market. It is one of the top 10 fastest growing cities in the country. And this may give it away, but I'm still not going to say the name. The Urban Land Institute has named it the #1 city to watch for the second year in a row. The only other city that I think has ever gotten that 2 years in a row is San Francisco, which is a much, much larger MSA. Cities with aggressive local governments that are actively pursuing growth. Polycom ranks this market as the #1 MSA for economic growth. It is very well located within our country. It has a very I would say, pro-business tax structure to the city and the state, which makes it very attractive for a wide variety of companies. Within a day's drive, you can actually reach about 80% of the country's population. So not only does that make it very convenient for your more tech companies, which are flying all over the country, meeting with different businesses, but also your industrial and logistics companies, which are needing to ship out across the country. It has a 7% increase in tourists, making it a top 3 city in the USA. Kind of wild for me to believe, but it is starting to get competitive with Las Vegas in terms of the, percentage of tourism compared to its population. But most of that tourism is actually centered within about a 10-block radius, as opposed to the entire city, which is quite a bit of tourism. That's for sure. It's changed night and day since I was a kid. It's been really fun to see how the city's fundamentals have just changed. Let's see. Multiple employment drivers. Forbes ranks it as the number 2 city for creating tech jobs. And, one thing that's really interesting about this metro is that it weathers pandemics. It weathers economic downturns fairly well. It's usually very quick to recover. 2008 hit. This city didn't get hit too hard because it is so diverse in its employment, and recovered relatively quickly. I think it was 2010, 2011. We were already back on the train and real estate was back up on the rise, whereas many other cities across the United States took several more years before they started seeing any further growth. Over 53,000 businesses are located in the region, and there is a wide range from your entrepreneurial tech startups to some of the biggest companies in the country, if not the actual world, which makes this a very diverse business economy. There are a lot of education drivers here. It is one of the, well, I can't say that because I'll probably give away the market. We'll talk about this later, but it has a lot of universities and colleges here, which is very attracting, or it's very interesting for a lot of these corporate headquarters that need a highly educated workforce, which leads to these higher salaries, as you saw, over $100,000 salaries from 2015 to 2025 coming to Nashville. Oh man, I blew it up coming to this market. Oh, let's drive into it. I gave it away. Barriers to entry of similarly priced competition. I was so worried I was going to do that, and I was doing so well. 19,000 units are under construction. Last year, about 9,000 units were absorbed with only 7,000 units delivered. And so despite how many units are being delivered into this mystery market, we're still going to lean into this mystery market. The absorption is pretty wild because of how many people are moving here a day. We've had record growth in the city. And despite the amount of deliveries coming to the market, it is still filling them up. And actually, in some points, it has the highest absorption rate in the country, particularly on the apartment multifamily side. It's one of the hottest housing markets, and it's pricing out buyers. The rent versus own gap is about 50%, which is wild to see. A lot of that is because of home prices are just getting more and more expensive across the country. Another part of it is that the city is having a hard time keeping up with the amount of residents that are moving to it. And it's just far more affordable. Now you've got build to rent here as well, because this city is sprawling. So you've got a lot of suburbs and suburban opportunities there as well. And moving on to landlord and business friendly markets, WalletHub ranks it as the best large city to start a business. There is as I had alluded to earlier, a very large contingency of entrepreneurial startups here. There is very much an entrepreneurial environment where they foster and promote these startups and these businesses to make that work. And it's certainly a part of the culture, which is continuing to be a big part of our job growth. And if you want to look at which markets are going to continue to attract business and residences in the future, it's going to be these business-friendly cities and states that will help drive that growth. And it is a landlord-friendly market. As we had mentioned earlier, you don't have to deal too much with the issues that the Northeast and the West do because it is very pro-real estate in this area. So that makes it far easier to invest. I guess I've already revealed it. Very similar to Texas, but it actually has a lower real estate tax structure than Texas does, which actually makes it a pretty attractive area to invest in. So moving on to the mystery market reveal, which I totally didn't do earlier. It is Nashville, Tennessee, which is where I am born, bred, raised. I know y'all weren't expecting that because I definitely didn't let it slip. But Nashville is the city that we've been talking about. It has had some outstanding growth fundamentals over the last economic cycle, this past 10, 12 years. The skyline here has actually doubled in the last 5, and it is set to double again in the next 5. We have more cranes per capita in this city than anywhere else in the United States, which really leans into, again, just how well positioned it is to where all of these major development companies, major investors, major businesses are relocating here and building their corporate headquarters. We've got Amazon, Ernst & Young, Oracle just recently announced a 65-acre campus near downtown. So the growth fundamentals are certainly there. Nashville has unlimited entertainment. We talked about how big the tourism was earlier, and that is, it's certainly a huge factor to its growth. In fact, over 50% of the sales tax in Davidson County comes from that 10-block radius that I alluded to because of the bars on Broadway. It was one of the fastest markets to recover after the pandemic for its tourism. A lot of people think that hotels were struggling across the country, but for some markets like Miami, Nashville, and a few others in the South, they actually saw explosive growth. And a lot of hotels are doing better now than they were in 2019 because everybody is ready to get out there and enjoy themselves. And this market is very easy to drive to. As I had said earlier, over 80% of the country can reach this city within a day's drive, making it very easy. Nashville also has the soccer club, which is, we just opened that this past year. That's been a major driver. All the season tickets sold out very quickly. We've also got an NHL team with the Nashville Predators and an NFL team with the Tennessee Titans, as well as a semi-pro baseball team in the Nashville Sounds. They're all located relatively closely to downtown. They're very easy to get to. And so that has been a huge entertainment driver. And of course, it's Nashville. It's Music City. Let's not leave out all of the concerts that you can go to, whether that's at the Ryman, Bridgestone Arena, Ascend Amphitheater, all which are within a walking distance to each other. It is such a phenomenal city and has very unique character and tourism drive. So there's so much for you to do when you come to this city to visit. Immediate employer proximity. You can see here that this is one of the major developments going on near the Gulch. Looks like we might have lost Dan there. I'm going to keep going. One of the major drivers here in downtown area, you've got Pinnacle, which is one of the largest employers in Nashville with over 1,000 employees, Amazon, and you've got Asurion that are all building new buildings downtown right now, as well as Bridgestone, which has the Bridgestone Arena. They've got an office tower in the downtown area as well. And of course, Oracle, as I said, they are actually relocating or creating about 8,500 jobs in the Nashville area. It was one of the largest jobs announcements. Actually, it was the largest jobs announcement in Tennessee history. And they're building a 65-acre campus just across the river from downtown. So quite a bit of jobs activity there. One thing to note as well that's not on here, Alliance Bernstein, or maybe it is. Yep, it is there. Alliance Bernstein relocated their headquarters off of Wall Street in New York. I had talked about that a little bit earlier. They manage billions and billions of dollars. I think that they've already pulled together enough in the past 2 years to where they are the single largest wealth advisory company in the city, which is pretty phenomenal to see how fast they are growing within this market. But it makes a lot of sense, right? Because they've got connections all over the country. A lot of these investors, family offices, private equity firms, hedge funds, they all want to be in Nashville because the tax structure is very, very beneficial to them. And the growth factors are all there. Dan, with that, I will turn it back over to you.
I will say I had a great Tyler, man, I laugh. I'm glad I was for the mystery market reveal, only 5 slides earlier. So that was fantastic. hopefully I had a little bit of technical difficulties, but hopefully you guys were still able to see the screen and hear everything as my Wi-Fi was going on at my house. So with that, we sped through that, but we wanted to really reward you guys with a nice gift here at the end. And I know at the start we had a commercial that was featured on Fox Business News last week, in which if people contacted us, they could get access to the book that we've already written. That's on Amazon, but we don't want you to actually pay the $20 for it. Well, we want to give another surprise gift outside of our own personal book, and that is Limitless. And so if you can see the screen right now, I'm holding a physical copy of it. But if you guys scan for a free copy, but if you scan that, we will mail you a book of the Limitless. There is a limited as books by Jim Quick. It is one of the best books that one of my top 2 books I read in 2022, and I read over 50 books in 2022. So that means it has to be at least, in the top 5% of books. Strongly recommend it. It's beyond just real estate investing. It's really how you maximize your mind, which means you can maximize your life. So I've blabbered on enough that it should give you enough time to scan for a free copy of this book. And you can then be a part of our Anthem Capital monthly book club, where Limitless will be the topic of conversation for the month of March. So with that, I'm going to silence myself and see if the guys have any other comments they'd like to make.
I can jump in real quick if nobody else or while everybody else is thinking. But Nashville is a phenomenal market. It's grown so fast. That what I like to say to people, because I never moved away. I went to Knoxville for about a year and had to get back to the city. I tell people that I got a new city by staying where I was from, because it's just grown so fast. Like I said, when I was growing up, it was about 1 million in population, and we're over 2 million in the MSA now. The growth factors are there, which I think is always important when you're making an investment decision. But the intangible that is there as well is that Nashville has a character that I think is unlike most other cities. It's got this very unique draw that brings in a lot of your residents, a lot of your businesses, and it's a blue city within a red state, which gives you a great tax balance when it comes to not only your landlord friendly environment, but also your what you're paying in property taxes, which just gives it a lot of great fundamentals. So excited to be working with the Anthem Capital team on hopefully some future deals in this market, as it is a very fun one to get to work in.
And I will just take a minute to add and highlight again what Tyler just said, that this market has a very unique mix of things. And it's a market I've personally visited it more than once in recent years. I've invested in a development project in this market many years ago. We have in the multifamily space over the last 5 years or so, we have looked at opportunities in both Memphis and Nashville. And as a result, have visited both of these markets. We don't own anything in these markets yet, but these have been on our radar, especially Nashville on our radar for some period of time. And we continue to try to own something in these markets, and hopefully we will very soon.
Yeah, absolutely. And I'll just add to this that I've experienced this myself, taking my own family there on a vacation, taking them downtown, and being quite honestly overwhelmed with all of the activity that is going on. There's a tremendous amount of activity, especially with the football team, hockey team, and whatnot. Diehard fans as well. I saw firsthand all of the growth that is taking place. So very excited to be focusing on Nashville. See all of the opportunity, experience all the opportunity there firsthand, and look forward to be working with this team and Tyler as well.
Awesome. And I'll just add my, color commentary on Nashville as well. Being originally from the Midwest, I love Nashville. It was a quick travel for me, 5 hours from Cincinnati. I have a lot of friends that now live down there full time. And in fact, one of my first times visiting down there, a buddy of mine in real estate had just moved into a new area of Nashville. And I proceeded to spend the rest of that weekend knocking on people's doors trying to buy their plot of land. This is about 8 years ago. And I've now continued to just monitor Nashville, and have even gotten into some bidding wars with, we'll just say, a GM of a Major League Baseball team also had the same insight of trying to buy a lot of property in Nashville. So it's a popular market. And maybe that will be our next mystery market, whether we're actually going to have a property soon or not. So you guys will just have to stay tuned on that. But Tyler, Tariq, Ivan, I really appreciate it, guys. Everybody, thank you for tuning in. Like I said, you can scan that QR code that we originally had up for a free copy of the Jim McQuick book, or if you want a free copy of our own book, just mention that to us when you email us, and we can get that over to you as well. But thank you, everybody, for joining us, and we'll see you in the month of March. Take care.
Thank you.
See ya.
Thank you.